Great, welcome back everyone. I'm really glad to be here once again. We have Mathias Imbach, the co-founder and group CEO of Signum, who's going to be showing you a little bit of a presentation now. We'll have a little bit of time for Q&A at the end, so don't hesitate to ask all your questions in the chat and we'll try to get to as many as possible after the presentation. So Mathias, the show is all yours. Take it away.
Thanks a lot, Jaras, and pleasure to be here today. I'll just share my presentation and hope that will work. Just give me a second. There we go. Okay, can you see that? So, wonderful. Great. I assume you can hear me and you can see me. So it's a pleasure to be here. I'll spend some time on reflecting on what I feel at this stage of the industry evolution in terms of tokenization, what success factors are to really in an institutional manner provide bank rate tokenization. Before I do so, just briefly introducing Signum so that you know whom you're dealing with today. Signum is a digital asset technology group with a banking license in Switzerland and a capital market services license in Singapore. We're fully focused on providing an all-in-one account approach towards digital assets encompassing cryptocurrencies, stablecoins, and asset tokens, which we're focusing on here today. And that targeting and fully targeting institutional investors, qualified private investors, and also via a white labeling solution, banks. We are now 110 people, have obviously, when you look, given the market traction over the last 12 to 18 months, been in a bit of a hyper growth phase, managed more than $1 billion, significantly more than $1 billion of assets under management, and have also been able to operate profitably in the last few months given the market situation. With that, and what we do is really an end-to-end integrated digital asset banking approach, obviously with custody as at the very core, then 24/7 trading facility, asset management products to provide institutional investors access to this new still emerging asset class. We have a lending facility where we take crypto as collateral, and tokenization end-to-end stack, which we'll dive into a bit more in a second. Before deep diving on tokenization and reflections on what drives successful or should drive adoption of institutional grade adoption in the next few years, I'd just like to highlight how we think about different token types, just that we know where we're navigating. There's two broad categories. One is really tokens without any rights towards the counterparty-less tokens. These would be the native protocol tokens such as Bitcoin or Ethereum. So it's an easy check, right? You cannot call a Bitcoin company, nobody will pick up the phone. So it's a counterparty-less token. It's a fully distributed, decentralized network, which is actually in itself, it's also its strength. And then you have a different type of category, which is tokens with the right against the counterparty. These are both payment tokens and asset tokens. Payment tokens would be stable coins. As an example, at Signum, we've launched our own digital Swiss franc token, which allows us, particularly also in tokenization, to provide delivery versus payment, and with that, to make sure that there's no break in the technology when it comes to settling then the transfer of asset tokens. And asset tokens, digital representations of securities, including real assets. This is the focus of today. Now, when I reflected what I should bring today for a presentation, and when I reflected over what really drives, in my view, success at this stage of the market evolution, I was reminded of a slide which I've presented about 6 to 8 months ago and at the presentation, and then I thought it can't be that it's still true. I probably need to change it or reflect on it, and it will not be the same anymore. But then I had to, for myself, realize that the same is, I feel, still very much true. There's been for now quite a long time very high expectations of what tokenization will bring and all the disruption that it would bring. At the same time, though, if we're very honest, also very self-critical as an industry, the true potential in itself really still has to be proven. So we're still in its infancy if we look at an operational level. The story goes a bit like this. We have lots of and countless press and marketing messages saying we have tokenized X, Y, Z. But when you then dig a bit deeper and really look into it, there's still very few production level projects with real value proposition for investors or liquidity of the token, which are transferred between particularly also institutional investors. Now, why is that the case? One driver certainly is that while the technological aspect itself is actually quite easy at tokenizing from a technical standpoint, creating the smart contracts that are necessary for it, benefiting from what the key characteristics of the blockchain technology in this space. It's easy, it's understood. Many great minds and smart minds and teams have worked on it. We know how to do that. However, if we look at it holistically, this is really just the tip of the iceberg. I mean, 80% or so of the overall problem to really drive innovation and bring something real to the market is the end-to-end thinking it through. That is, how is it embedded in the legal framework? How do we make sure that all current regulatory frameworks are upheld? How do we ensure compliance frameworks are upheld? How do we integrate it into traditional, for example, banking processes? How do we ensure reporting? How do we make sure that investors do not interact with the technology, but it just feels it's a good use case, easy to use, and drives as a result adoption? Let me just say, we're probably not yet there, but at Signum we feel we have cracked that and are on the brink of really solving it and showcasing it also, as we have done with Lighthouse projects. So I don't want to sound negative with my statements, but because I obviously do believe in the transformational potential that it has, but it will be a process and it will take time. Over time, though, I'm convinced it will lead to a completely revamped new financial market infrastructure that is much more efficient, and where processes of today have to be redesigned or rethought again, because we cannot use, and that's sometimes a pitfall that I see, particularly when large players get into into the fore. We should not think about just doing the old processes or existing processes the same way, just with the new technology. The blockchain allows us, given the fact that we can transfer originals and not copies without intermediaries from me to you at any point in time, within seconds, as long as I have access to internet, it helps to basically completely redesign also some of the processes. Now, what are the 5 reflections on what I feel are success factors at this stage of the market evolution? And when I say at this stage, I mean we're at the very early stage. So we're probably one cycle behind the life cycle on the cryptocurrency side, the counterparty-less tokens side, where we've seen significant increased institutional adoption over the last 12 to 18 months. Of course, it remains volatile, so it remains, particularly for institutional investors, important to have a long-term investment thesis and not follow the 24-hour price tracker. Starting with the first, and I've hinted at it already in the intro remarks, is really that at this stage of the evolution, where lots of the players along the value chain of securitizing an asset have not yet been established, it's important that to really be able, as a player in the field, to offer it end to end. And when I say end to end, I really mean for both the issuer as well as the investors to have a combined platform which works, which doesn't feel like you're integrating with various different types of modules or players, where it's easy. You don't interact with the technology. It just feels seamless, and that is very important. At Signum, we've done that, and we've invested 3 years now, lots of money, talent, created IP around that, and really want to own the value chain on the tokenization side, because we feel it's at this stage of the evolution the only way to drive value. This is on the one hand side, obviously covering the issuance, and there it's not just the technical issuance, it's really also the legal regulatory know-how to have it in-house to help clients to structure products, but also to make sure that they're in line, for example, in Switzerland with the new DLT law, and as a result can be placed in an institutional fashion. It includes advisory, distribution, but also fully digital subscription management. If we look at our platform, for example, you can subscribe to a new token with 3 clicks, and it's completely legally binding, and you have it in your portfolio. It works. The same applies then to the rest of the value chain, the trading, the settlement, the custody, where at Signum we follow, again, that all in one platform approach. We have also an open trading facility signed off by the regulator, which allows us for these security tokens to be traded. I'm not saying here that at this stage of the evolution we have billions of dollars of liquidity on the platform. That's just going to happen step by step. But we have a platform where these assets can be exchanged and where investors can buy, sell, and see a price development. Important here again is the settlement is in our case the digital Swiss franc, because if you do not have that leg covered as well, and you basically rely again on the fiat rails, then basically you again the weakest link in the process, which here clearly then would be a Swift message or the Swift protocol, what breaks the whole point of tokenizing. And if you have it on chain, you can offer true delivery versus payment. You can significantly reduce counterparty risk, complexity, and also cost. So again, covering entire value chain is key at this stage of the evolution. Otherwise, it's just not fun and no true value proposition for both issuers nor investors. Second is, we've had that, right? But I just like to keep on repeating it. Tokenization, for the sake of tokenization, will not help anyone. Tokenization itself creates easily transferable digital representations of securities, takes away a lot of the process complexities. However, it does not make the underlying more attractive if it is not attractive, or if the product that is being structured with tokens is not attractive. And I must say, we still I would say as an industry are still in the learning process there. A lot of things also do not make sense to be tokenized. So it's important to understand what the benefits are and what the technology can do, and then as a result of it, derive from it which assets actually should be tokenized and why is it true value proposition versus not. Here's a little bit the map of advantages that tokenization brings for both issuers and investors. I just picked a few across 4 elements. Access to capital markets, for example, the fact that you can, if you do it right and have the right tools in place, you can create cheaper access to capital through the digitized issuance process. I touched upon this before. 3 clicks and you're an owner of such a token, which represents real ownership in, for example, a company. Then on the transfer of ownership, given the characteristics of the technology, you can again significantly reduce complexity as the blockchain, for example, replaces written form requirements. Thirdly, when it comes to corporate housekeeping, it's a key characteristics of the technology that every transaction is immutably written into the ledger. That means there's no such thing as updating an Excel sheet for a mid-cap company when it comes to its cap table. This is taken care of. The same applies to, for example, the payout of dividends via a digital Swiss franc or a digital euro, which can be programmed and then be automated. And last but not least, from an investor's portfolio diversification standpoint, you have a new tool which can lead to new types of assets, which can help to increase diversification by adding previously hardly investable assets to the portfolio. On the basis of research, market feedback, and as just where we see real use cases and demand, we've at Signum decided or zoomed in on the 4 key investment platforms that we're focusing on. And for all of these, we have various ongoing projects, some launched, some in the project stage where these tokenizations are happening. Maybe, now after gaining experience in the space, I must see that the 2 on the right are actually the most obvious and the most tangible for people also to relate to. It just seems to make sense that, tokenizing a corporate or a commercial building or even whatever type of real estate kind of makes sense, makes it bankable, makes it accessible to a broader group of investors. So we've seen significant traction and demand there, but also on the art and collectible side, it's just a new way of creating emotional investment opportunities around. What we've done is we've tokenized portfolios of wine, or right now working on a very exciting project where art pieces of extremely well-known artists are being tokenized and then made available to a broader group of investors. The third success factors, in my view, is ultimately, again, regulation and trust. There's no giving in to shortcuts if one wants to be successful. And I think adoption is triggered by trust. And if this is not taken care of, and also maybe sometimes taking baby steps is actually more advantageous than going too fast, too far, and then having to backtrack. This is probably driven by, in some minds, there's still that element of, this could, on the utility token side, non-security distribution or placement side, it just felt quite easy, right? I mean, many of you may have gone through the ICO hype a few years ago. And that's just a different game. And so those players, both issuers, investors, and also market players, such as Signum and others that want to play in this field, just need to be acutely aware that's a different game if we're talking about securities. One element, for example, that I often feel is not taken into account when it comes to issuers' expectations is, for example, cross-border considerations, right? People feeling they can just place security tokens all over. For that, there's not yet enough standards in place, regulatory clarity across various jurisdictions, but also just the fact that there's not a lot of players that have a multi-jurisdictional setup to be allowed to even place internationally. And then the last two, I've kept them as in one bucket, is again linked to where we are in the market, in the market evolution. If one wants to play in this field, one has to just accept that one is pioneering still, right? We are finalizing the technical infrastructure and the inclusion in other kind of institutional processes, while at the same time educating and building a market. And that is tough, but also super exciting, because those who get it right early will obviously have outsized returns once the market is ready or in the next phase. So what here, in my view, is important to never forget is that also leads to a situation where, in a first stage, this may not always appear to be 100% scalable, because there's still always a little bit of a solutioning process happening, which is needed via lighthouse projects to then get to a productization of the process and then scale it. In our case, we do this across the 4 verticals, really zooming in, focusing on 4, and then creating frameworks across the entire value chain, how this can be productized. But this is a process, and nobody, in my view, can claim that they have already fully productized that process. And then secondly, again, it's important, in my view, to avoid rebuilding existing known processes with the new technology, but still following the same process. It is the process flow. It's important to think outside the box and take advantage of, as it says here, of being able to pioneer and also rethink some of the things that may have been broken in the past. And then last, but not least, and this is quite important to me, and I often feel that this is sometimes a bit missing, is I strongly believe that if one wants to be successful with tokenization as an institution offering it in particular, you need to understand crypto. It's a prerequisite. This whole spiel or narrative of we believe in the blockchain, but crypto is just for illegal activities. I find it I find it a position which is not very well reflected, because if you think about it, 90% of what you're using from a technology from that point of view is the same. It's basically Bitcoin was the first use case of, or let's say, an invention which allows to transfer originals and not copies from me to you from anywhere in the world, as mentioned before, as long as you have access to internet. And many of the things that it triggers, from an infrastructure requirements, from how to include it in more broader business processes, are exactly the same when you tokenize. You need, as a player, you need to be able to handle a private key. You need to understand what a private key, publicly key pair is. You need to know cybersecurity considerations around it. You need to know how to include it or merge it or integrate it with more, let's say, maybe a legacy system environment, how the reporting works, how you can show a crypto next to an asset token, next to a traditional security, next to fiat, and how that looks from a reporting standpoint, how to treat taxes, etc. So I think that's just something which sometimes is forgotten. And what here often may help is to just maybe accept that time often puts things into perspective. And here's just an example now more focused on the crypto side of things, where we have seen that many of existing large, particularly financial institutions and payment companies have first taken very strong stances against it, but then over time, driven by maybe more reflection and analysis, but certainly also client demand, have shifted their stances and now are helping to drive institutional adoption. And I feel a number of particularly banks who may have started off figuring out, okay, let's start with tokenization, are now actually realizing that it's hard to separate the two. If you go into the tokenization business, you actually go into the crypto business in some sense, and getting this right and thinking about the strategy holistically, I feel, is another such success factor. With that, I think I also heard that the conference is a bit behind the schedule, so I kept it to now hopefully around 20 minutes. And if we have some time, I'm very happy to be here for a few questions.
Thank you. Thank you, Mathias. That was very, very insightful, and I really like the quote at the end. I think it really depicts what this space has gone through. We do have a few questions here. So we have one from Bjorn about how does Signum plan to work with marketing partners, assuming it's investment banks with their issuers, which will require them. Would you be able to comment on that?
Yeah, it's a good point. It is very true that you can't do everything yourself, and so for example, we do follow a partnership strategy there, and I don't want to say that it's already fully in effect. So this is very much in a building stage, but we have, for example, just hired a small team focused on exactly establishing these partnerships. This is along the entire value chain, right? For example, we don't aim to build a big corporate finance in-house team. So we partner with M&A boutiques to address the mid-cap vertical, for example. And that's just one example where then ideally you then have the process of tokenization via Signum, with Signum as a partner, is one pitch they have as one way of raising capital, for example, that they pitch to their clients, so that we basically create win-win situations with such partners. And the same is true, or there's different types of partners that we are establishing across different verticals. For example, we do not claim to be art specialists. We don't claim to be custody specialists for wine, and so we partner with specialists that help us taking care of that part, and we focus on what the technology group and the bank would do in that process. Yeah. So it's a very relevant question, and if there and we're always looking for the right partners to help us grow the pie.
Great, thank you. I hope, Jean, that responds to your question well, and a great approach, right? You can't do everything by ourselves. Maybe one that's been like a recurring topic of this kind of today has been, maybe you can provide us with some comments on the whole DeFi world. I mean, Signum has taken a different approach, right? But there's this kind of whole space that is coming up nowadays. Would you like to provide some comments on your thoughts on DeFi as a whole?
Yes, I can. Of course, it's super exciting. It's very much at the frontier of the next evolution of innovation and the real use case of in the crypto counterparty-less kind of the decentralized world. I think it's been phenomenal to follow the evolution and the speed of also adoption. If we look at some of the major platforms, I think at some point it was almost 90 billion USD locked in liquidity pools built on Ethereum. Obviously, very much also been a driver in the value increase of Ethereum, which has led to also challenges in terms of scalability, etc. All the stuff that is just normal in the evolution of technology, which will take care of itself, I'm sure. So we are very closely following this space at Signum. Our role here is the following: we are a banking partner for these projects, for the foundations behind them. We help them bridge the gaps to the traditional world. We help them custodize their treasury assets, to give them rails to US dollars, Swiss francs, and other fiat tokens, not tokens, but fiat rails. However, also we are working on projects with some of the leading players in creating a CeFi DeFi bridge, because we believe that ultimately the killer app will be those who get that interface right? So, the moment DeFi gets too big, it won't be the case that the regulators and national banks and everyone just lets this happen and billions or trillions of dollars will just somehow float around. It's just not going to happen, guys. Let's be honest. So those who are smart, and there's a number of great founders out there. When I think about the Aave guys or the Curve guys, etc., that actually get this and are looking for partners who can help them get into that next phase. So overall, I think it's the great frontier of innovation in our space. We're following it closely. We leverage the technology or that is being built and the smart contracts as much as possible, and now are creating frameworks how we can kind of integrate it in a regulated space so that also larger tickets, real institutional investors can participate.
Thank you. Very insightful. And I know we are running a little bit over time, so thank you so much for being short and very concise with the presentation and the answers. Maybe to wrap it up today, would you like to give some closing statements for the audience listening?
No, just pity that we cannot all meet in person. So really look forward to these events again. Hopefully at some point allow for real networking and coming together, and also maybe have a drink at the end of the day. So, but overall, always a pleasure to hopefully share some of the insights from on the ground. Overall, I'm extremely excited about where we are in this industry, and for me, the key factor for this confidence in it is when I look at the talent that comes together with capital and the great technology, as I don't think we've seen it many times. I think so. I continue to believe we're in a once in a generation or so shift when it comes to building financial market infrastructure and innovation of how we empower people to have again more direct access to ownership and value. So just that it's exciting to be in this space, and great that you're interested and following it, and many of you also contribute.
Inspiring words. Mathias, thank you so much for joining us today, and hope to see you soon. Thank you.
Same to you. Thanks so much. Bye-bye.
Thank you. Bye.